Terminal funding is a solution for business owners who have defined benefit pension plans. It enables you as a business owner to assess what your future liabilities are, pay a certain sum of money, and have an insurance company take over that obligation and to essentially get that particular future obligation off your books. It's a process that's been around for a long period of time. The insurance companies that are doing it are some of the biggest and best insurance companies in the United States. And it's something that is highly recommended. It's something that we do here at 4structures.com. How can companies get into trouble with their defined benefit plans? Well, one only has to look at the city of Detroit and perhaps General Motors a few years ago for two classic examples. If you look at the recent bankruptcy of the city of Detroit, the commentary associated with it, you will see them talking about the pension plan liabilities, the absolutely crushing pension plan liabilities that are negotiated by the unions. Well, the unions are not necessarily to blame. I mean, the unions negotiated these contracts and somebody who negotiated them agreed to them. But what one has to look at is the actuarial assumptions that were used to make the books seem like the books were okay. So whatever they did in terms of figuring out, how much money needed to be in these plans to pay these future liabilities, there was some type of assumption as to a discount rate. It's the same kind of discount rate that one uses, for example, in evaluating any type of future cash flow. If you overestimate the discount rate, you might find that discount rate is far in excess of what one might be able to get in the marketplace, and a safe investment, which a pension plan should be a safe investment. You might find yourself with a particularly large deficit, which is what has happened. I think there might have been a 2% or more spread between what was used and what the reality was. And I think the city financial manager of Detroit, some senior official of Detroit, talked about if there was realistic assumptions, it might have been a lot higher. And a similar type of statement was made regarding General Motors at the time. There was a pension bailout. So it's not a good thing if you overestimate your reserves. That might be a short-term fix, but unfortunately, the kicking the can down the road eventually has to result in some consequences. And unfortunately, for many of the municipal employees of the city of Detroit, there are going to be some dire consequences regarding their pension plan. At least that's what people seem to be saying and the press seems to be saying. I certainly hope that it's better. So what a terminal funding case does, if you're an employer and you see things starting to go and you have cash and you can find some cash, you can actually get rid of certain liabilities. You can buy a terminal funding annuity and you can have an assumption of those specific liabilities for a particular price. The solution is at hand for a price. The question is, how long do you wait to do something like this? If you want to have a frank discussion about terminal funding, please feel free to give me a call. My name is John Derer. My toll-free number is 888-325-8640. We also have some information on our website, which can be found at www.4structures.com. We look forward to speaking to you about terminal funding. Thank you again. Have a good day.